or consumer and retail. And Walter, that's pretty much your playground. And congratulations also on this big anniversary for Quadrivio.
Well, yeah, of course, consumer retail is one of our playgrounds, as we have different strategies. Clearly, with a lifestyle fund, we focus on this area. And it's fun because I've always thought that when we talk about this area, sometimes there's a tendency of overemphasizing some numbers, some signals. For example, I mean, when last week LVMH came out with 9 months figures, many people started saying, oh, luxury is dead, luxury is falling, luxury is disappearing, something like this. And at the end of the day, it was minus 2% in the first 9 months. It's not minus 20% of the car industry, it's minus 2%. So yeah, of course it's minus, which LVMH is not used to, but I mean, it's not the end of the world, right? So I think sometimes we need to put things into perspective. For sure, we believe that there's a tendency in general that we're starting to see, and we expect to come more in the future, that is a bit of shift between from luxury, pure luxury, to a more affordable luxury, right? Which is where we are focusing on. Because, I mean, many luxury companies brought prices really up a lot. So consumers, even who can afford to spend a lot of money on luxury products in any category, are starting to think, okay, maybe they went too much up. So some iconic products will always be priced at any price, right? But we expect that there's a tendency in a bit of shift between pure luxury and more affordable luxury, and we're focusing on that area. Clearly, in this moment, it's more a market for buyers than for sellers. I mean, our view, I mean, we've been accelerating our pace of investing. I mean, in 2023, we didn't do any investment in this space. In 2024, we already did 3 new investments, 2 in Italy, 1 in France. We did 2 add-ons. I mean, we believe that now that prices and multiples have come back to being a little bit more reasonable, it's a good moment where to buy, where to consolidate. I mean, because of course, when the market is booming, it's more difficult to make consolidation. When the market is a bit shaky, a little bit more difficult, we think it's a moment where you can work on consolidation programs. So yeah, I mean, our view is that it's a good moment for buying. It's not easy to exit. I mean, we did a very successful exit this year, but it was not easy. Yeah, it was not easy. I mean, despite the company was fantastic. So it's not the best moment for selling, as simple as that. So we are trying to accelerate investments. We've done quite a lot this year. We'll do probably even more next year, given the pipeline we see at the moment. This is our view, at least.
I want to mention the exit of Autre to Style Capital. That was also closed earlier this year. And I think what was interesting was the fact that you also reinvested, actually, in the company, which I guess is a good sign in this sense.
Yes, we did. We sold the company after 2.5 years, quite so shorter than expected, in fact. But we thought a very good exit, very good performance. But we thought that the company still has a lot of space of growth. And in fact, we decided to reinvest with a new fund, in fact. And it's paying off because, I mean, the company, even this year, is double-digit growth, which in this space, in 2024, is not easy.
You can be happy and yeah, relieved. Also, you're kind of bullish on the fact that this is the moment to be bold, and if people are a bit more cautious, like jumping in when you see the right opportunity. And
yeah, yeah, we definitely see a better moment for buying. We have a couple of companies where we are considering potential exit, but we are discussing only on a one-to-one basis with industrial buyers. We see less financial buyers in this space at the moment.